Marisa. We're going to trade. It's a positive, not our win. Hi, I'm Marisa and welcome to my channel. I hope you subscribe and put on your notifications so that you can get all the information that I share here. So what I'm going to cover in the session today is my 5 key steps that make up the blueprint of becoming a profitable trader. I'm going to talk you through those. I just want to tell you a little bit about myself. I really started method trading because it's the system I used to become a profitable trader. I found the journey actually really hard. There was a lot of anxiety, a lot of mistakes I made. I'd place good trades and then I'd get fearful of the outcomes. I'd exit them too early. I'd get scared to enter and I wouldn't enter a trade. So all of those things you're going through, the frustration, the fear of, will this ever happen to me? I've been there. I really lived this because becoming a trader was a huge dream of mine. My background is in finance. So I worked in the corporate world. I started my career as an accountant, and then I moved into investment banking, and I spent about 15 years working for investment banks in London. Basically, throughout that time, becoming a trader was always kind of my pipe dream. I didn't really take it seriously until 2020. Until then, I was kind of hoping that as a hobby, it would just eventually become something that I could rely on, but it just never did. So in 2020, I made the big decision to actually make trading my next career, and that's what I do now. I'm a full-time trader. I'm also a trading coach. And I like to actually really help other traders become profitable because I know how much I struggled. And one of the reasons I think I struggled so much is that the information just wasn't in one place. There's lots of bits of information. So everything I'm going to tell you today, and what I'm going to do is tell you my entire blueprint for how to become a profitable trader. But everything that is in my blueprint is not originally mine. I haven't invented anything new about trading, but I have taken what works and put it all together in one place because it's really frustrating when you are shopping around and trying this, then trying that, then trying that, then realize, oh, you should have kept that from that. And it's just a lot of trial and error all the time. What my day looks like now is that I trade generally about 2, maybe 3 hours in the mornings, sometimes less because I don't always have trading setups. And then in the afternoon, I do coaching and I provide information and material on my channel here to help other traders. So that's kind of me in a nutshell. So what I'm going to cover in the session today is my 5 key steps that make up the blueprint of becoming a profitable trader. I'm going to talk you through those. Before we get started, though, I want to tell you about 2 overarching concepts that you need to really take to heart. So number 1 is, from this moment forward, you have to stop following the crowd. If you think about trading, it's a zero-sum game. Not everybody can win. And most people, 95% of retail traders actually fail. So you have to stop listening to the crowd. If you've subscribed to, I don't know, Reddit groups, Discord groups, anywhere where there's chat around trading, any kind of paid signals, any group, mass group congregations, you need to get out because you cannot be where the masses are. That's not how trading works. That's not where the successful traders are. And you're being taught either things that are not going to help you, and you're being taught those things because it's making someone else money. I don't want to get into the details of that, but if you kind of follow the money, who's making money from anything? That's the reason you're in those groups. So you need to get out of groups. They just don't work. I'm really sorry. But even sharing trading ideas, you have to protect yourself and your thoughts and your mind as a trader. It's not really protecting your trading ideas. It's not that someone's going to jump on the trade ahead of you. It's not your market information that you're protecting. It's you. It's your confidence in your decisions, your confidence in your own strategy, in your own analysis. That's what you're protecting. You don't need external voices from anybody, and that includes my own. So if you ever see me sharing any of my trade ideas or trades I've entered, I don't really share them often, but sometimes I might just flippantly mention them somewhere or post something. Follow yourself first. It's really important, and you are one person and you have to protect that. Okay, so number one is get out of the crowds. Number two, you're going to have to start thinking a little bit differently. Okay, now the reason that there is a crowd and there's 95% of people that fail, you've got to think, what do 95% of people think? Okay, and they're thinking the most obvious thing. So whatever feels like the most obvious, the most like it must be this, that must be the answer, it's not going to be the answer. Okay, you need to actually think differently, and how it's going to feel for a while is it's just not going to make sense. Even things I go through today, my blueprint, you might at first just be like, that doesn't really make sense. But I want you to just, pause your disbelief for a little bit and just accept that some things might sound a little bit not quite right or different. But different is good, and rewiring our brains to think differently, to think outside of the crowd, is exactly what we need. None of this is going to make that much sense right now, but I promise you, when you become a profitable trader, it's going to make a lot of sense. And you're going to be in the situation where you're going to be struggling to really explain it to somebody else, because it's like, being Neo in the Matrix and saying, I took the red pill or the blue pill. I can't actually remember which one it is. And then trying to explain to someone what you discovered when you took that pill. That's kind of what this is. So I get that it sounds absolutely bonkers right now, but just stick with me, because my only agenda here is to help you become a profitable trader. Right. Let's get into this, because it's quite exciting. This could be the start of your journey to actually stop doing all the stuff that doesn't make sense and it's keeping you in a cycle of failure, and start moving towards your actual success and becoming profitable. Right. First one is the concept of liquidity. Okay, we need to understand how the market works. And when you understand the players in the market, you'll also understand better why price moves how it moves. It doesn't mean that you're going to be able to predict 100% where price will go to, but you'll be able to understand when price doesn't go where you expect it to go, when you expect it to go and go somewhere else. You'll also understand why it's gone there. And the reason this is really important is it doesn't matter what strategy you trade. When you understand this concept of liquidity and your trade doesn't work out, you don't spend any time going to investigate why on earth did this trade not work out. It just sometimes doesn't. Okay, not even sometimes, often does not work out. Any strategy will have a max 60% win rate. If your backtesting strategy has got a 70 or 80% win rate, I can guarantee you, either through your own errors or just the way the market is, or just your own timing of getting to your chart, you're going to miss some trades. A 60% win rate is ridiculously high. Okay, the top traders have a 60% win rate. That means there's a 40% loss. That's huge. Most of us will trade like a 50-40% win rate. When I have a 40% win rate, I make a lot of money, because my strategy is structured that my winners make a lot of money. So for me, 40% is perfect. You can be profitable on like a 30 or 20% win rate. As long as your strategy is profitable, you need to do the maths. But not going to investigate every time you have a loss, because think about how many losses there are, and that's a winning strategy. There's nothing wrong with losses. You must not spend any time wondering why did this trade not work out. You must not spend any time going to do analysis of figuring out why that trade didn't work out. You're only doing that because your brain that wants to be the expert and always be right needs to now find a justification for why that trade didn't work. And unfortunately, it's like having all the cards stacked in your favor, but the next card just might not be the card you need. And there's no rhyme or reason for it. There's no reason for it. It's just the probability. That's just how it works. You need to accept that. And Mark Douglas, in his book Trading in the Zone, talks to the accepting, like taking a punt on, are you willing to risk some money, take the bet on this one working out, and then whatever the outcome is, the outcome. It's like tossing a coin. There is probabilities, and statistically you just won't win everything, and you need to accept that. You need to 100% accept that, okay? But this isn't what this first point is about. This first point is about liquidity. And if you need a reason for why your trade didn't work out, and it's going to help you to not go down that spiral, because maybe you haven't quite accepted the statistics and the probability yet and the gambling aspect of trading, and you want to, in your brain, know as an expert, why did this trade not work out? When you understand the concept of liquidity and the market players, it's going to help you to analyze that and understand it very quickly, okay? You won't even have to analyze it because you just understand it. Now, for every buyer in the market, there's also a seller, okay? There's an equal number of buyers and sellers. So when people say price is going up because there's more buyers, it's not true. There's an equal amount of, for every point of sale or buying, there's an opposite transaction. There has to be a seller on the other side of a buy, okay? Otherwise it makes absolutely no sense. But the volume of buys can just be driving up. There's always sellers somewhere, but the volume of buys can start to, let's say, manipulate price in that direction. So who are the participants here? There's the large participants. This is called smart money. These are banks, hedge funds, pension funds, any huge organization that's got a lot of money, and they need to put that money into the market, okay? And you've got to think of it in terms of orders, okay? Whether they're going to buy or sell, they've got a lot of orders to fill, and often it's client orders. So think of them with a huge volume, okay? And there's thousands of them, but they make up a huge amount of the market because of the volume, okay? Then you've got the retail traders. That's like you and me, and the millions of small traders. And there's loads of us, millions of us, that we each trade with a small volume. So in a group, we make up a large volume, but each of us is a small volume. So those are the two kind of players in the market. The big volume is called smart money, and us here in the small volume, but in bulk we all make up huge volume. We're called, let's call us the dumb money, okay? And that's the crowd, right? That's the crowd I'm trying to get you to stop listening to, because what's happening as smart money is manipulating dumb money. Because guess what? As we said, when there's a buy, there has to be a sell. So when smart money wants to buy, they want us to sell. When they want to sell, they want us to buy. You need to get out of the dumb money and follow the smart money, okay? You're not going to start becoming a driver of price, but you're going to become a follower of price. And you need to understand when they are manipulating price, and they're manipulating price because when they want to buy, they need to manipulate the price that it looks like they want to sell so that these people sell. When they sell, they're buying. Then price goes up, okay? Have you ever been in a trade, you place an order, you get into a trade and it wants to go long. You're like, oh my God, this is a long trade. And then you just get stopped out. And then the trade moves in your direction, okay? We've all been there. It's a horrible feeling. And then by the time you get a second entry, you're too scared now because, sometimes you can get stopped out 2-3 times. And then you're like, oh, well, now I'm too scared because now I think it's going to go the other way. And then by the time, you're too scared, the price moves in your direction. And you're like, if only I had just stuck to my guns. I think we've all been there. It's a horrible, horrible feeling. Now, what's happening is, I know some people want to call it like they're hunting your stop losses, okay? They're not really hunting it. What they're trying to do is they've got a huge volume of orders to fill because generally the smart money has client orders to fill. They've been given an order from a client like, get me this. Or they're, trading the company's portfolio, and there's instructions, okay, it's get this. They've got volume to put into the market. Now, they can't just, when we buy, okay, when I place a buy order, I can just go in and be like, there's my order. I can just go in and be like, buy, and the whole order gets filled. These people can't do that. They can't just take, millions and millions and millions and just buy. There's not the volume on the other side. If they want to buy, there's not the same volume of sellers on the other side. So they need to manipulate price. And I'm not saying that they're doing this in ways that are not allowed, okay? They're doing it in ways where they move price so that other people think something's going to happen and they do certain things. That's how they manipulate it, okay? So they're not breaking the law. But if they want to buy, how do you think they manipulate price to make a lot of dumb money sell to them? The answer is that they make it look like the price is going to go down. So what happens is they actually sell. They sell. These people go, oh, it's going down. They jump in because they're always late. They jump in and sell, and then they swoop in with all their buy orders, and they get filled. Okay. And then they go, oh, we've got more to fill. We haven't filled all our buy orders. So they do it again. These guys sell, they swoop in and buy up all the orders. Okay. So they'll do it many times they need to do it to fill their orders. And the other thing is, when you have gone long, they also know that after there's been a flush out like that, a lot of people jump in and also go long. Okay. So they've bought, then a lot of people jump in and also buy. So they go, okay, well, if we try and sell again, everyone will sell, we can buy up. And when we get to that price, there's going to be all the stop orders. So there's even more selling going on, and we can buy even more. All they're trying to do is fill their orders. Okay. And when you understand this, you can start seeing where smart money is manipulating the price and where their real intention is going. And it's these two things. It's called liquidity. And the way I trade is with liquidity. I trade with order blocks. So there's order blocks where you can see where smart money have placed sell orders and then buy orders, and then they go back down to also get out of their old sell orders. So this is kind of also called smart money concepts. But you can trade any strategy when you kind of understand this price action. This is why price doesn't just go straight up. It's why it goes up, down, up, down, up, down, up. It goes down to go up, okay? Because they are selling to buy, and vice versa. They are buying to sell, and it's so that they can fill their orders. Okay, I've got a far more in-depth video on liquidity and how it works, and I'll try and make the link available in the description, because it's really valuable to understand liquidity and the players in the market, because the market is actually a business. For most of the money in the market is a business. They're placing orders because they've got client orders and they've just got huge volumes to get in. And if you understand how they're using retail, you can stop being part of retail. So don't get into signal groups and all this crap and groups, and you just need to look at the chart and understand what you're looking at, okay? And then you can start trading with smart money. It doesn't mean when they might kind of keep dropping that price to fill more orders. You don't know when their orders are filled. And this is why you can't never have losses, because you can't completely predict. It depends how many orders they have, depends how long they want to kind of keep going down to fill their orders before price runs. And that's why you get these ranges, and ranges can last a while, okay? But you need to understand the players in the market and order flow, because it's going to give you such great context, okay? Number 2 in my blueprint is high time frame structure and context. Now that you understand liquidity, you need to understand that order flow happens on every single time frame, okay? There's order flow on the 1 minute chart and there's order flow on the monthly chart. And obviously monthly charts, there's order blocks left that's years and years and years old. And these huge institutions want to push price there to get out of or into old orders. They're moving the markets actually move. Okay, stocks move a little bit differently sometimes, but the market kind of like fluctuates like this over years. But there's always these flushes out where you can look at when there's huge movements, huge flushes. You can actually go down to the weekly or up to the weekly, even the monthly chart, and you can see where they want to head, where price wants to go long term, okay? So if you're trading, I don't care what you're trading, the 1 minute, the 5 minute, the 15 minute, the 1 hour, you need to go up a few levels to a higher time frame and look at context and higher time frame structure there, so that you can see on a higher time frame where does price actually longer term want to go. And then you understand when you're trading in a specific long or short, whether you're with trend or you're against trend. And when you're with trend, you can be a bit more, you can kind of know where your levels are going to go or where your targets are. And when you're against trend, you can look for where do they want to kind of like fill more orders, because you understand that if they're going long, they're only coming down to fill more orders to keep going long, okay? And it changes the way that you set entry levels and targets. You need a high time frame structure and context to trade on. I personally enter trades on the daily or the 4-hour candles. So my higher time frame context is on the 3-day chart. So that's what I like to use. I look at that manipulation, so the selling to buy or the buying to sell. You can see where they are on the charts, and I use that to know where price wants to go, and therefore am I trading on trend or against trend, and it affects where my entries are and my exits are. Okay, so really important to start finding yourself a higher time frame and putting the context around. And if you want to trade my own strategy, I think it's more important that you trade a strategy that you like, that suits you, that preferably you've kind of developed yourself. Even if you've taken bits from strategies you've learned, make it your own. But you can get my entire strategy. There'll be a link in the description. You can get it, and it'll go into details. I go through charts and trade examples, etc. But even if you use that as your basis for a strategy, make it your own, because it's more important that you're trading something you like and then adding optimization. So this is just optimizing it so that you kind of overlay it with the liquidity factors and with a higher time frame context. Okay. But obviously in my strategy, I go through these items in a lot more detail to show exactly how I do it. But this is a blueprint for It doesn't really matter how you find that higher time frame context, but you need it. You need to know if you're trading on trend or against trend, if you're trading a retrace. Okay. Number 3. So let's talk about strategy. Number 3 in the blueprint is you must master your strategy. You must be an absolute master of it, and your strategy must be simple, very, very simple. Refine it down. Simple, 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 and then become a master at it. Do not jump from strategy to strategy. Stop thinking there's a better strategy. Take your strategy and just keep becoming a master at it and optimize it. Just make it better and better and better. And if you take the strategy you've got now and you go and you overlay the liquidity rules, so if you understand how liquidity works, you can start identifying order blocks. So any strategy that teaches you smart money concepts, that's what you're looking for. So if you put that into YouTube, you'll find loads of people that teach you smart money concepts. A lot of people will teach it for free. I myself do videos every now and again teaching all my stuff for free. But you can get my entire strategy if you want right now, but you don't have to. Go and find anything that's teaching smart money concept and overlay it over optimize your own strategy and overlay it, okay? Then get a higher time frame context for direction and trend, overlay that on your current strategy, and then become a master at your current strategy. So you probably know your strategy really, really well. You need to know it even better. You need to have back tested it at least 60 back tests minimum, and then you should keep back testing and keep forward testing. So every week you should go and back test the week that's just been and compare it against your actuals, and then you kind of grow your back testing. So your back testing keeps growing because you're actually forward testing it as well, and that's really helpful to also go, how has my performance this last week gone against the back testing version of my strategy? But just start thinking to yourself, I am a master at my strategy. Only you know your strategy. Only you know your strategy as well as you do, and you need to know it inside and out. You need to know it so well. You need to be the master of your strategy, and you can only do that by back testing the heck out of it. Okay. Number 4, you need a system around your strategy. Now, I came to this kind of realization because I've got a fear of flying. I had it for years, and one year when I was 20, I went backpacking, and in that year I took about 18 flights because I went to the UK, America, Canada, and I did a lot of internal domestic flights, and I counted the flights because it was quite harrowing for me. But to kind of overcome my fear of flying, I got obsessed with studying air crash investigations because I wanted to know every time there was an error in an airline, in a crash, something happened, that they investigated it, they found it, and then they made improvements. So I'm quite an expert at airline crashes, to be honest. But what I took from that into my trading is that the airline industry is exceptionally good for making processes to help their pilots overcome errors or to avoid errors. Because when pilots are faced with more than one task, and I'm not saying pilots are simple people, they're very smart, trained people, but they found that as soon as there's a little bit of stress, so things aren't going quite right, and they're faced with more than one task, they shut down their ability to notice other things, shut down. And I don't even know what you call this. It's a bit of tunnel vision. But basically, traders have the same thing. We think we can hit the charts and trade all these, trade our strategy, which has got quite a few moving parts, and there's things to look at, and there's maybe you've got your chat groups open and you've got Twitter open and you're reading the news and you're thinking that this is normal. If you were a pilot, the airline industry would shut you down because they'd be like, you cannot fly a plane, you cannot operate like a sensible person with all of that noise and pressure. And as traders, as soon as we've got access to our charts in the market, we are actually in a pressurized system. We're under pressure. And so our system, the system I'm talking about, is the same as what an airline would put around their pilot to safeguard their pilot. And so my system, which is method trading, and that's what my channel is all about. I keep sharing exactly what I'm doing. I provide daily videos. I provide daily content through my newsletter, etc. Just sharing what I'm doing, because I get it. You can't absorb everything in just one day, but you need a system. So my system is a routine that gets me into the day. When I trade, I have a routine. I have checklists. I have, let me show you I have checklists. I operate like a business. This is a checklist that if I've got a trade position, that like a trading opportunity, so I want to enter a trade, I get this form out, and I've got to fill out this form as if I'm doing it for my workplace, and someone's going to check this form. So it's a checklist. And the idea of a checklist comes from the airline industry. They use checklists. It doesn't matter what's happening. If there's an alarm, they'll get that system's checklist out and they'll just checklist. If they're going to take off, they go through checklists. If they're going to land, they go through checklists. They don't leave it to chance that their pilots are going to be able to cope with all the varying bits of information and the pressurized system that they're in. The stress that's placed in their body just by having a plane full of people and having to do everything right is enough stress. And the stress you're under as a trader, you might not even realize it, because it might not, you might not feel it, but you feel it when your trade goes against you and you start that panic. You feel it when you suddenly thought you had an entry and now you're not sure. You feel it when you've been stopped out again and suddenly a price runs in the other direction. You just have that like, that's stress. That's what is happening when you're with a computer, with the markets. All of those reactions are stress. And if you think that you can operate at this high ability, like actually thinking clearly, seeing things clearly, you're wrong. And it's got nothing to do with you. It's got to do with us as people. And the airline industry understands that. And they've identified where pilots have caused crashes, not because they're not competent, but because they've been totally over swamped with information that they've missed something and they've made catastrophic errors. And as traders, for us, our catastrophic error is, if your error happens to be trading without a stop loss, or something that exposes you to more risk, you can wipe out your whole account. And we've all done that. I've wiped out an entire account for not placing a stop loss. Okay, it was years and years and years ago. It was one of my first mistakes and it was horrible, and I still remember it. Okay. Now, yes, so back to the system. Okay, so that's my checklist. I also have a log. I log everything I've done. At the end of the week, I've got a weekly system that I go and check. I've got a backtesting system. I've got an optimization system. Everything I do to do with trading has a system around it. And I share all of that in my method trading course. But again, I created it myself. I figured out what worked for me. If you know what to do, you can go and create your entire own system. Okay, if you know why you need to do something. I did it. You could do it. You don't need my course, but I'm just trying to share that I have done it for you, and you can go and find all this information on YouTube for free. There's so much information out there, but at least you're going to know what to cherry pick and what to use and what is useless. Okay, now we're getting there. Number 5, and this is probably the most important. I think all of those things are really important, but this is also very, very important, is that trading is 90% psychology and mindset. It's really, really important that you start spending 90% of your time on yourself. Understand yourself. Okay? Strategy is important, and I've talked about strategy. If you can align your strategy with liquidity and a higher time frame context, you probably know your strategy is already good. You've back tested it. It's great. Is it that complex? Probably not. Nothing about trading is that complex. A lot of it's like colors and pictures. So why is it so hard? It's so hard because we're spending 90% of our time on the thing that's not actually hard, and we're spending no time on the thing that is hard, which is our psychology. And our psychology is just our behavior under pressure. That's basically what it comes down to. So start understanding yourself. And that's by time. 90% of your time should be spent on yourself. Go and do courses that help you with emotional intelligence. Go and do courses that help you with, or read books on fear, on working under pressure. Read books in the airline industry. How did they fix that? Do anything, any kind of personal development, anything that helps you understand yourself more. Okay, that's going to be in mindset. And there's so much content again on YouTube for free. And also, you must read books like Trading in the Zone, and you need to read that book multiple times. Take notes. It's got everything you need in that book. Now, how can I help you? Okay, so one thing is I've got this channel. I love putting content on. I'm really passionate about psychology and mindset and how it helps traders become profitable. I'm very passionate about becoming a profitable trader. I worked in it for years, and I feel like I've been doing it forever, like figuring out how to do it. And now I actually do it, and now I'm sharing with people how to do it. So it's all like, it is my passion. I share it all here on this channel. So subscribe to the channel, put on the notifications. I also send out a daily newsletter. It's again all about mindset and psychology and behavior and systems and how to improve. So if you get that kind of like quick read, it's maybe a minute read every morning, it can just give you that little boost you need to go and do your best that day. So subscribe to the newsletter. And then finally, you can grab my strategy. We've already talked about that. There is a link, so grab that if you want. And if you do want personal coaching, so I do performance coaching for traders. If you want to kind of have your hand held and implement this blueprint, you can also leave me a comment, and we can figure out how we can make that happen as well. So I do one-to-one coaching. I don't do any groups. I don't do any paid signals. They don't work. I don't waste my time with them. I don't do Discord groups. I am a performance coach for CTI Funding. They're a prop firm that provide funding. I'm a funder trader through them as well. So if you want funding, there's a link. They're the prop firm that I suggest you get funding through. They're fantastic. And I'm a performance coach with them. So once you're inside there, you can ask for Coach Marisa as well. So that's really how I can help. And I hope you found this helpful. It really is everything you need, but it's obviously just an overview. There's a lot of details inside of there, but use this as an overview so that you can start zeroing in and focusing in on things that really matter and things that are going to make you profitable over the long term.